Hey, everybody. Welcome back to the Be Your Own Bank podcast. It's everybody's favorite time of the week, the weekly Roundup.
Hey, guys. Thanks for tuning in again. Really appreciate your support. Feel free to drop a comment. We love that. This week, we want to talk about kind of the market conditions that we are seeing drop drastically over the last few weeks, what our predictions are, as well as what we are doing during this so-called bear market. We also want to talk about the state of stablecoins. We just saw the catastrophic failure of Terra LUNA and UST stablecoin. We are doing more research to try to find stablecoins that will work. And so we're going to talk a little bit about the ones that we think are here for the long haul. And then I also want to talk about Ethereum again, because they have announced a tentative merge date when Ethereum will be moving to proof of stake. So let's get into it. The market sucks. A lot of the analysts are saying that we're officially in a bear market. This is also reflected in the stock market. The stock market is down a lot. I'm sure people's retirement accounts have lost value. Mine's down, 16%. But of course, it's only down on paper because I'm not selling.
Right. Let's remember that. Let's not forget that. Right?
Yeah.
Is that you only lose if you sell. And in fact, you only gain if you sell. So
right.
If we're talking about the markets in general, the S&P 500 is up over 100% since the bottom of the pandemic. So when it bottomed during the pandemic, it's now up over 100%. So I think a little healthy correction is due. Now, what's driving that, especially on the stock market? The reason why we talk about the stock market is because the crypto market has been following, for the most part, what the stock market does. When money comes in, then the stock market and the crypto market go up. When money goes out, they both go down. So eventually, we hope that the crypto market will run kind of the opposite that way, because Bitcoin especially is a store of value, we believe. And so right now, the S&P 500, the Dow Jones, the NASDAQ, all these, especially tech stocks, are getting beat up, right? And that's because the economy is slowing, and that is a precursor to a potential recession. So that word has been thrown around a lot lately. And I think it's important to kind of understand that that's okay, that we have rallied quite a bit in every market. And now all you're hearing is the pundits and the YouTubers and the people who want your eyeballs. They're just, doom and gloom. If it bleeds, it leads. And so I think it's important to kind of step back and realize that we have made a lot of gains from 2020 to 2021. So if you got in at the tail end of that, I'm sorry, but hopefully you're dollar cost averaging.
Exactly. And I think we have a lot of historical things playing out in the crypto market. Bitcoin has traditionally been on a 4-year cycle of highs and lows. We were on the tail end of that in November of 2021. So far it goes with the times that Bitcoin is correcting. Now, there are a few unprecedented things that are occurring that I think we want to draw your attention to, one of which is that Bitcoin was developed out of the last recession. It the white pages came out in October of 2008. First block was mined in 2009. So this was coming out of the recession. So Bitcoin and crypto has never seen a recession.
Right.
So this will be the litmus test to see if it is in fact recession proof and can overcome that and be a store of value. Now, when I see these drastic downtrends, I get anxious just like everyone else. My fear starts to go up and I start to think, should I sell?
Right.
Should I take, because I've made gains. I'm still in the green, unlike some people, a lot of people that recently got in, but I'm still in the green. My question for myself is, do I sell now? Do I take my profits when I'm confident in this technology continuing to grow, especially in the short term, the next 3 years? I believe that it will go back up to new all-time highs. So in order for me to sort of hedge that fear, that psychological grief that I'm having, I look at some of the positives, at what what is going well. And one thing, we'll pull it up on the screen here that you can check out, which I think is really cool, is this is, of course, CoinMarketCap, an aggregate of all of the exchanges, information on value and market cap. So right now what we're looking at, and you can find this yourself, you just go to coinmarketcap.com and you can sort by categories. And if you sort by categories and you go over to this dominance tab here, you will see some of the top, sort by highest to lowest, you will see some of the top portfolios. And, you know, they say follow the money. So these are the big companies. We've got Coinbase Holdings, Coinbase Ventures portfolio. We've got, let's see what another big one is, Binance Labs portfolio. And so you can see what coins they are investing in heavily. It doesn't show you exactly what their percentages are. But if you look at a lot of these, they're in Bitcoin, they're in Ethereum.
Yep.
You know, the top two, it makes sense that they're sticking with that. And that gives me comfort that I'm investing in that. And I'm also dollar cost averaging. I'm putting in weekly money into Bitcoin and Ethereum specifically right now, because in a down market, a lot of the altcoins are going to get wrecked. Ethereum is, you know, the top altcoin, but I believe that over time, right, in the next 3 years, 2025, we're going to see another all-time high, and I'm buying at a discounted rate. I'm buying at 50% off right now.
Well, and you have a time horizon, right? And you're not trading, you're investing.
Right.
So when we say investing, we say, hey, I'm putting this away for a long term, and I'm not going to take it out for 10, 15, 20 plus years. Right. And that's what investing is. And that's the rule of 72. We've talked about it before. So 72 divided by your interest rate, that's how many years it will take you to double your portfolio. So that is the key to investing. Whereas with trading, you have a long time horizon, I'm playing a little bit more of the trading game. And so I'm looking for opportunities to play rallies and to scrape a little bit of profit, because I was in earlier than last year. If you are not in profit right now, then it's not important to understand this. What you need to do is just dollar cost average, and you will win this game, because over the last 12 years, well, 14 now, right?
Yeah.
It has grown exponentially. Are we saying that that's going to continue to grow exponentially? No. Is it going to start to even out maybe a little bit? Yeah, very possibly. And that's a good thing. So just stay the course. But for someone like me who is doing a little bit of trading, now I am looking for opportunities to buy the dip, sell the rally, and start to build my portfolio back, especially after, you know, what the Terra Luna situation was for everybody. So,
which was a huge learning opportunity.
So it depends on what your strategy is. But if you are new to this and have just gotten in over the last year or two, then just relax, take your emotions out of it. It is a roller coaster ride, but you will come out on top, and you'll be happy that you didn't sell at the bottom.
Right, because that is what the institutions want you to do. They want to scare you by dumping the market, getting it to that fear zone of, 0 to 10, which we were at the other day.
The fear and greed index is at 12 right now.
Right, which is a continuum again. So from 0 to 100 being full greed, 0 being full panic, we're at a 12. So we're in extreme fear, meaning that retail investors like us tend to be selling because they're scared of losing more, and they are feeling doubt over the validity of this whole market. And so that's great for institutions, because they're just going to keep accumulating. They're going to buy a lot over a long period of time, many times, and they're going to accumulate so they don't drive the price up. And then when it is time, when the halving happens, that it does go back up, the institutions will sell when it hits an all-time high. The retail investors will only get back in when it starts going up again.
Or they might not get back in because they're like,
it's too expensive
this before, or it's grown a little bit and now it's too expensive. And so it's just better to stay on the sidelines, which is incorrect.
Right, because the market gets scary, people get out, and then the market gets boring. And when the market is boring, people don't want in on it.
Right.
And that is the time to accumulate, because when you're accumulating when the market is boring, you're buying it cheaper. And then when the market gets, crazy and super hyped up, now you have more and it's worth more, and you can hopefully sell some of it or a lot of it when it goes up, but you're never going to hit the peak.
Well, and let's be honest too, right? If you got in a year ago and you saw profits double, triple, quadruple your portfolio in a matter of months, you didn't earn that. You know, this system works so brilliantly in the way that it will humble you, and it will show you that you got greedy, and it will catch you, and it catches us, you know?
Yep.
And so we may still be in a bull market, as hard as that is to believe.
That's very hard to believe.
So I'm just saying that it's not a done deal yet. So
right.
The idea that if you stay vigilant and dedicated and just squirrel away a little bit at a time, then you are going to start to see gains grow over time, as opposed to this 100x guaranteed.
Which is, I mean, I'm a sucker for Warren Buffett, but he's proven his model. You know, he could have bought his home when he did whatever in the 50s or 60s. He could have bought it for $150,000, but he took out a loan, he put $30,000 down, and then he just dollar cost averaged into his own company. And that extra money plus the other money that he was pouring into it, you know, grew to $750 million over decades.
Right.
But he was consistent and he was patient and he rode out the waves.
Yep. Because you're right. You will never catch the bottom. You will never catch the top. Why even try? Because now you're putting those emotions back in. Oh, why didn't I sell the top? Why didn't I buy the bottom?
Mm-hmm.
And that's where you get stuck, is because you'll never find it, number one. And number two is, the minute you get emotional, you panic and you start to make mistakes.
Right.
And if you have a plan, an investing plan, you know, then that is going to get you to the final destination.
Well, and full disclosure, I had an investing plan for this last bull market and I didn't stick to it. And had I stuck to it, I would have sold it higher than it is right now. It wouldn't have been at the all-time high, but I would have sold it higher than it is right now. And I would have been sitting really well. I would have been sitting on, you know, stacks of cash that I could then reinvest or dollar cost average more into. And yeah, so this time, you know, again, it's humbling.
You learn a little bit more each time. And that's why I'm saying, if you got in a year ago, you don't deserve those gains that you saw for a day or two.
Sure.
You know, and I'm being honest, right?
Yeah, that's fair.
You have to play this a little bit more. You have to lose in order to win. It sounds bad, but you have to realize your mistake before you can make the right decision, and then start to be a little more conservative with your plays and all that kind of stuff. So, but let's just go back to the idea that we are in a bear market.
Yep.
Or a bull market. So the difference between this time and last time, there are a few differences. We had basically a double top right around that 67, 69 currently. So that double
and what's
top.
A double top?
A double top is when the price hits a certain level, comes back down, and then comes back up and touches that same level one more time for a double top. And that usually signifies a reversal.
Right. Same thing with a double bottom.
Yeah.
Signifies a reversal to the top. Yeah. I mean, it's important to know that.
I, for some reason, was thinking something different when you said double bottom. Like a badonk. That's what I was thinking.
Yeah, that's all right.
I apologize.
That's all right.
And now that's all I can think of.
No, that's fine. Your double top signifies a reversal, and that's what we saw.
Right. Well, that's what we think we saw. Okay. So the idea that, you know, the last time we had a bull market was in 2017, and we had what was called a blow off top, which was an exponential growth through the roof, parabolic move, just crashing through the ceiling and just melting everybody's faces. So that's happened a couple times. That was the third time that has happened. So if this is the fourth cycle, it didn't happen that way.
So it still could happen.
So what I'm saying is
what you're saying.
Bullish case is that this is just a temporary stop on our way to the moon. I'm not getting excited for that per se, but it is a possibility, right? That we also talk about the market cycles
getting longer, which would fulfill that point or support that point.
If that's the case, doing the math based on the different cycles within that close to 4-year period, if that was the case, then we would see the blow off top at the end of this year. So it is a possibility. Now, the things that are
there's a lot of other variables
in the way of that. Yes.
is the recession, is the war,
okay, so
potential recession.
Potential recession.
Yep.
So we said this before. Recession is when GDP, gross domestic product, meaning the things we sell as a country, that goes down. We have less GDP for the first quarter. And then if that happens 2 quarters in a row, then that's a legit recession, which we haven't seen for quite some time. So we are due.
We're overdue. I forgot what his name is, one of Warren Buffett's like not predecessors, but colleagues who's also.
Are you talking about Charlie Munger?
I believe I am.
The 93-year-old?
No, not Charlie Munger. No, this guy's, this isn't Charlie.
Okay.
Anyways, but he said every 2 years, you're going to see about a 10% drop. Every 6 years, you're going to see about a 25% drop.
Okay.
If you go based on that, then there's no real worry.
Okay. Yeah. I mean, that sounds about right.
So it's been over 6 years.
Right. And we're definitely due. And the fact that the stock market went up 100% since the pandemic, we have the war in Ukraine. Yep. That's still going on. All of this unrest, financially.
We got monkeypox.
That's right. And
that's not real and not a big
that's
issue.
not an NFT.
No, it should be.
We've got high inflation. We've got interest rates going up. So money's getting more expensive. So when money gets more expensive, less speculation. So yes, am I leaning towards bear market? Yes, I am at this,
I am as well,
at this point. Now just be careful when you're watching videos and stuff of everybody who's like, oh, the face with like,
oh, super serious Bitcoin warning.
Right. Yeah.
Yeah.
Here it's going to zero, all that stuff. It's just take that with a grain of salt, try to get the kind of even keel. Because once again, all we're trying to say is this is a really long game. We say it all the time, and you have to play it the long way or you'll get out too early.
You'll get out too early. Yeah. And you probably lose. So, one thing that this is my own opinion, is because we didn't hit that blow off top. And if we don't hit it, at the end of the year, if this is a true bear market and we're going down, traditionally Bitcoin goes down 85%.
Oh, roughly. Yep.
Roughly 85%, altcoins 90+% decrease.
Which have gone down. The altcoins have already gone down 90%.
And we never had really an alt season.
Correct.
Which we usually have as well. So there's 2 things going on that are unprecedented, and one of them will be proven. So either Bitcoin goes down 85% and it drops below 20,000, or Bitcoin continues with its trend where it never goes below the last high. So the last high was about 20,000.
Yep.
Okay. So if it does go below that, it's breaking that trend in favor of the 85% drop.
Right.
My thought is, because I just kind of see this as a pendulum swinging, right? So when we get that blow off top, when it goes way high, it tends to go way low before it corrects. We haven't had that blow off top. And so I'm thinking that it's not going to go way low. I don't think it will go way low, below 20. I just personally don't think it's going to go below 20.
Okay, so we're betting a Bitcoin on what the bottom is going to be?
We're betting, I will bet you 20.
It's not going to be worth as much.
No, I'm going to bet you 27 billion Terra Luna.
Oh, okay.
So it's like 60 cents, I think.
Is that really? Is that right?
No.
That sounds high.
It does sound high.
Okay, so to your point, I think if this market is if the top is in, then it's a new game, right?
Yep.
Which in the long run is good, but it's hard when you're trying to assess patterns and things.
And plan your life.
Oh man. So I think I'm gonna disagree on this one. And
That's fine.
I think as a contrarian now,
which is important.
What I am.
I think we got to have some of that.
Well, no, a contrarian would be bullish, I guess. But a contrarian to your point, I believe it will go down 85%. And I think we will see a 10K Bitcoin. But I think that will be the bottom. And I think it's going to scare everybody out like it did last time, going from 20K to 3K. And I think it's the retail investors won't see it coming and won't see the opportunity, and we'll be playing this game again in 4 years. That's my guess.
All right. And that could very well be true. But then it's going to invalidate the other point, which is that it doesn't drop below the the last.
That's what I'm saying.
Yeah.
I'm saying the fact that we have no blow off top
Mm-hmm.
and the fact that we just hit our 8th week of negative trading, which has never happened.
Right.
You know, so it's what I'm saying is the crypto market is telling everyone to chill out. It's going to do what it's going to do. Nobody knows. And just dollar cost average,
please.
Like the fact that I'm saying 10K, you know, it doesn't matter. It doesn't affect the way you should be investing.
but it should prep you.
But it should get you excited for the potential,
prepped, yeah.
right?
Yep.
The patience, all of these things that we talk about is, now there is a sense that if we do hit a recession, it's going to be bad for all markets, including the crypto market. So just be ready for that and don't overthink it, man.
Yeah, it's so easy.
That's our job.
Yeah, we're going to overthink it for you. All right, but throw up this other chart because I think visuals are helpful, and this is going to support my point. So this is a chart analyst. He does stocks as well as crypto. Trading Shot. Shout out to Trading Shot. He is on Trading View, which is a chart analytics software as well as like a chart trend software. Yeah.
Technical analysis.
Okay, so this is to support my argument. So he drew this graph. He said we've been in the buy zone since 2013 for Bitcoin. So we're here at 30,000 for Bitcoin. Okay, so here's my point. So we look at top 18, bottom 19. So if we stick with that again, we got a top in 21. We got a bottom, say January 23. That would put Bitcoin at 20,000 according to this chart.
No, I know. That's what it was before.
Yeah, and I don't think it's going to go low. I just personally don't think it's going to go lower than that.
But what did you also say is that Bitcoin has never been in a recession.
It's never been in a recession, which is
so that either is a good thing or a bad thing.
Yep.
The best case scenario of that is Bitcoin becomes a store of value and this thing actually launches and then everybody's into it.
Yep.
But I'm going to have to be the contrarian.
You got to be the contrarian.
Yeah.
So I'm going to bring you back to the rainbow chart. Rainbow chart, regression model. We're in the buy phase. I would call that more accumulation. So just, dollar cost averaging. But I mean, you look at the bottom at the halving, $10 in 2012. At the halving, $518 in 2016. At the halving, you're at 8,000 in 2020. Next halving, 2024. Call it the bottom. We're at a $40,000 Bitcoin still. So stay in it. Don't get caught up in the craze that this is over.
Right. Because that's what everybody's talking about now, is because that's the news cycle is everybody's a genius when the market's good and everybody's, a skeptic when the market's bad. Yeah. So if you're searching for that, you're going to find it. If you're just playing the game, then just put a little bit away at a time. Buy 0.00001 Bitcoin.
Yeah. I mean, Voyager is I like Voyager. We're trying to vet these crypto banks a little bit more. Celsius, I'm not feeling as confident about. I'm going to pull some money out of that just because of some of their practices, some of the press. But Voyager is FDIC insured for your US dollars, which I think is really good. It is a US based company and they have been around since 1993, not in crypto, but as a company, and they're publicly traded. Just information.
But we can't confirm that they have interest on your account.
We can't confirm they have interest. However, I'm using them to buy my Bitcoin and Ethereum, the dollar cost average, and you can automate it and have the bank just pull it right out. So super easy. If you're looking for a way to dollar cost average into some of the top coins, as well as some of the meme coins, whatever you want to do.
And Coinbase too does that.
Coinbase does that too, but they charge you a fee.
Oh, Voyager's free?
Voyager's free. I'm sure their margins are different. Sure, they have a margin spread. But anyways, it's free. They pull it out weekly. So moving on. I think we talked about that enough. Stable coins. UST failed. We had to do our due diligence to look into some of these other stable coins because I think there is a lot of concern and fear over it right now, especially because of UST. But I do think there are some stable coins out there that are going to be in it for the long haul and have a good backing process.
Can we just touch base on the Do Kwon situation?
Yeah, go for it.
Yeah. So Obviously, the collapse, we all lived through that. Kwon is the CEO.
Of Terra Luna.
We found out that they closed. I mean, these are articles. I haven't dug deep enough to know if it's true, but it seems to be true.
Well, I saw what you're going to say on Twitter as well.
Yeah, I mean, it's all over the place. But basically, they dissolved their South Korean headquarters. They have one in Singapore as well, but they dissolved that days, like 4 days before this.
May 7th, right? They dissolved it May 7th?
No, that was the reserves. So they dissolved it, and it was days before the event. And so that's a little suspect. He also, Kwon himself is being accused of tax evasion to the tune of $80 million.
80 or 800?
80.
80, okay.
$80 million. That's still a lot.
That is a lot.
Yeah. I mean, if his Luna is worth nothing at this point. The other really interesting thing was as you were saying, on May 7th, the reserves of the the Luna Foundation Guard.
LFG, yep.
Right. So the guys who were behind the
trying to save UST's
UST,
peg.
right?
Yep.
Is peg. So they should have enough. UST was worth 20 billion-ish, right? So they should have
UST, yep. Mm-hmm.
Right?
The overall market cap.
Okay, yep. Overall market cap of Terra UST was 20 billion, and the reserves, the peg, if you will, that could have saved the peg.
The collateral
that this foundation guard had was less than 5 billion in crypto.
Yeah, so that's 20%, right? No, 20. Not even. No,
yeah, like 25%.
Yeah.
But that was at the time of the event. So 24 hours later, those were depleted because the market had crashed. So my point is, they had less than $1 million in UST reserves.
Not good.
Less than $1 million of their own coin.
Yeah.
That's really bad.
Right.
So
because they thought, I don't know, that the system, the algorithm would be enough.
I'm blown away at that. I mean, this was nice because this tweet came out on May 16th, but whatever. And then $130 million in Terra Luna.
They had more reserves in other cryptocurrencies.
Yeah, they had a lot in Bitcoin, about 3.5 billion in Bitcoin, and over $1 billion in Avalanche, which is just like, what?
I don't know.
So this thing seemed doomed, and Kwon's going to be in trouble. So I just wanted to, update you guys on that.
Yeah, I think that's good. And then that goes into what stable coins are stable, because I mean, the name is stable. So UST failed that test. But it seems like the top ones, which are USDT, Tether, and USDC, US dollar coin, have been able to weather this storm and also outlast a lot of the other ones. So,
but why?
Right? So we looked into Tether because I personally felt a little shaky about Tether because they've had some bad press in the past. Yep. Their coin has dropped to 56 cents in the past, over $1.20 in the past. So that's not stable. To me, I thought USDC was the only good one because, it's US based. The CEO of Circle, which is the creator of USDC, is partnered with Coinbase, and, they've talked to Congress, so they've got connections. It seems like they're on the up and up, but why? Why are they better? Well, you have to look at the difference. So UST, algorithmic, there's a computer program running it. Decentralized, so to speak. But USDC and Tether are collaterally backed.
Right, but they also only had $1 million worth to back themselves up.
Sure. So they claim, Tether and USDC specifically, these are collateral fiat-backed cryptocurrencies, meaning it's backed by government currency and other assets. They claim that they have 100% backing. And so you can actually go on Tether's website, tether.to, and you can look, we can throw it up there. We got the breakdown for you. So 85.6% of their backing. So for every Tether crypto, there is cash or cash equivalents sitting in a bank account, and commercial paper, which we just learned about, which is the ability to just borrow a lot of money real quick.
Yeah, it's a quick loan.
Yeah.
It's like a
payday
high
loan?
What?
Like a payday loan?
Yeah, but you're not paying that kind of interest.
No.
Yeah, you're probably rich, right?
Yeah.
So
it's a minimum of $100,000 borrow.
Right.
Yeah.
Right. So you get a quick loan, you pay a quick interest rate, but then that's liquid. So you can cover your losses, and with Tether, that would give you enough time to burn at that point.
Right. So overwhelming majority is in cash or in these commercial papers, which they just announced is down to 17% of their total. So if you break that down further, you got commercial paper at 17%, CDs, at maybe another 17%.
Those are compact discs, right?
Compact discs, yeah, and then floppy disks. No, certificates of deposit.
What is a certificate of deposit?
It's just you basically, you put your money, you lock your money away with the government, and they promise you X interest rate if they have
your bank used to do that too. Yeah. I'm sure they still do, but the interest rates were decent. They were like 4 or 5%.
Yeah.
Now it's probably 1% maybe, but you got to lock your money away for 3, 6, 12, 60 months.
Yeah, it's ridiculous, but it is good in this case because it's there and it's safe.
It's safe.
Money market funds, so just in a bank account, cash bank deposits, U.S. Treasury bills, non-U.S. Treasury bills. So they've diversified the collateral, and only a small amount, 6%, is in investments. So they can hedge their best. Also, they're charging a fee to Coinbase. They're charging a fee to Binance in order to manage the transaction between dollar bills and stable coins.
All right. So how does that work? Because clearly the burning process didn't work with UST.
It didn't work with UST, and they didn't have enough collateral. So this process is a lot more centralized, which, big crypto proponents would be like, well, centralization's bad. In this system, I would say it's really good. It's important to have some centralization. So when you transact Tether, decentralized. When it's managed, it's centralized. So how does that work? So you want to buy $1 worth of Tether. Let's say you go directly through tether.to. You pay them $1, maybe $1.001 or whatever, and then they mint a Tether coin. So theoretically, there should be as much money invested is how many Tether coins exist.
So if I want my money, like what just happened with the UST situation where they had a run on the bank, to the tune of $7 billion.
Yep. You sell it on the open market. So you sell it on Coinbase, you sell it on Binance, you sell it on Nexo, wherever. And then those brokers have a deal with Tether, and they trade the Tether coins for cash.
Okay. And then what happens to the Tether coins?
They get burned by the Tether company.
By a central organization. As opposed to an algorithm.
Right. And so what happened was there was actually a big test on Tether when UST fell through the floor. $10 billion worth of Tether was cashed out. And in 48 hours, the Tether organization was able to manage that. They were able to take out those, commercial papers, and they were able to redeem those Tether coins for the money. And it depegged a little bit, but it was able to restore its peg, which is super important to the stability and longevity of Tether.
Tell me a bank that could do that.
To transact 10 billion in 2 days
and recoup everything and get everything back to normal.
Yeah, no way.
No. So that's a great thing. I think that centralization aspect of it is great. The fact that they are only audited, I think once every quarter or once every 2 quarters. So that's not great. These are third-party audits.
Yeah, third-party audits. But this is Coinbase now. Or Circle Coinbase, we'll call it, because they're partnered. But this is USDC. So USDC is actually audited every month. They have a report every month that you can look at. And yeah, they're even with their debts and their reserves as well.
But to that point, though, it's still a third party. So we're still in this decentralized world where we can't confirm 100%. But I would argue too that there's probably a lot of back alley deals going on in this current financial system. So it's just something to consider, right? Yeah. So of USDC, if that's being audited once a month versus Tether, which is being audited less frequently, maybe USDC is a better bet in that case.
It might be. The other thing too is that the fact that it is centralized helps regulators communicate with the necessary parties to make this viable and to make this less risky for the retail investor like ourselves.
Yes. And that's ultimately what we're talking about.
Yeah.
And then we're saying, hey, we do need regulation.
Mm-hmm.
This is important because we want full transparency. Right now, there isn't. And once we have full transparency, then we'll know what to put our money into so that we don't have a rug pull like this, which the more I read up about it, it seems like a Ponzi.
Seems like a Ponzi. Yeah, absolutely.
UST.
UST, yeah. Terra's stable coin. Personally, Tether, I don't put a lot of money into it. I would to, make a quick transaction, but USDC is based out of the United States. I trust that a little bit more. And the fact that Coinbase has a huge stake in it, and Coinbase is a huge company that has a lot to lose, I trust that a lot more too.
But they also say that they're 100% collateralized with Pax Dollar. And now the new one's called True USD. I guess it's maybe not super new, but they're saying that they are 100% backed, and that you can actually see their statistics on their website. And I checked them today, and it was from today.
Love it.
So that's pretty cool, is that it's transparent in that case, if it actually is. But, once again, it's like you still have to do a lot of research. And even if it sounds good, it may still be some sort of, shady deal. But I hope that won't be the case when we finally do have some of these regulated, and then the other ones will fall off because they won't be as popular.
Well, and the longer they last, the better chance they have of surviving long term, right? UST hadn't been around that long, like a year and a half, I would say, maybe a little bit longer. But USDC, Tether has been around a long time. Tether, they've been tracking since 2014, 2013. So
nice.
Yeah, it's been able to restabilize and stay stable for quite some time. I think that's a good thing for the longevity of.
Well, and the fact that the mechanism that keeps it 1-to-1 is centralized.
Yeah. So algorithmic stablecoins, staying away from collateralized stablecoins, I'm still optimistic about, especially USDC.
Correct.
Finally, Ethereum update, big Ethereum update. They have said that this June 8th, they will be launching the merge. So Ethereum 2.0 on the testnet.
Once again, that quickly is different than a fork, because a merge is they're merging the new blockchain with the old blockchain. So we're maintaining that Ethereum blockchain.
Right. So whatever your Ethereum 1.0 Ethereum and your Ethereum 2.0 Ethereum, if you did decide to stake already, it's going to be one and the same. There won't be a new coin like Tether or Terra Luna Classic. God. Anyways, so that's big. So June 8th for sure, testnet. And then Vitalik came out at a conference saying that potentially, because they keep pushing this off, but potentially August will be the official merge date should everything go to plan. There's a lot of moving parts. They're moving a huge network to a new structure. So, there's going to be bumps and blocks in the road. So I personally don't think it's going to be August.
Yeah, that I heard November was more realistic. But either way, it's a big thing they're doing. And I think, what does it go up to, 100,000 transactions a second or something ridiculous like that?
I don't know, because they're introducing quite a few new processes that will help scale that. Yeah, I don't know if it's 100,000. That would be great. I thought they weren't able to change how many transactions per second.
100,000.
100,000? Okay, that'll be huge. The other thing, I think the most important thing to note about Ethereum merging and being 2.0 is the idea of this triple halving. Bitcoin, we talk about the halving. Go back to this rainbow chart real quick, right? Talk about the triple halving. Every halving, so every 4 years, Bitcoin halves. So the reward goes down in half. The amount of Bitcoin injected into circulation is cut in half every single day until 4 years later, where they cut it in half again. So we've had 1, 2, 3. 2024 will be the fourth halving event in recent history. That's right. So that'll be the fourth. So take 3 of these halvings and put them all into one, and that's what's going to happen with Ethereum 2.0. All right, so we are going to be reducing the incoming supply of Ethereum from 12,800 Ether every day to 1,280 Ether a day.
Wow.
A 90% drop. So 50% drop in Bitcoin every 4 years. We're going to have, in one momentous occasion, we're going to have a drop of 90% issuance daily.
Okay.
That's going to be felt.
Yeah.
The other part of this triple halving is something called EIP 1559, which was the London hard fork. So this is when Ethereum updated. This was a while back. I don't have the exact date on me right now, but it updated in, anticipation of the merge. This is an update that caused Ethereum transactions to have a base pay that was burned. Burned meaning not in the traditional sense with UST or Tether where you're actually deleting coins, but these burned coins are being sent to an address that is inaccessible.
I thought that's what burning was. I'm pretty sure that's what burning is.
Is it?
Yeah. So when we say burning, it literally means this is the address, the phantom zone address. I hope you get that reference. And that you can't escape it, right? Is that it's gone forever, right?
Right. Well, you'd have to hack the address, and that would be almost impossible to do unless you had like quantum computing.
So it goes there to die forever. That's what a burn is. It's a burn address, and you deposit coins in a burn address.
Good.
Basically.
That makes more sense.
Yeah.
Okay. So right now the burn rate is I think, I want to say 30%, but it's high. So there's newly issued Ether to the tune of 12,800 every day. And a portion of every transaction is being sent to this burn address, basically deleted from existence, causing deflation. This is going to go up 90% or down 90% because the issuance is going to go down 90%. So that's huge. We could see the equivalent of 3 Bitcoin halvings because of this. And of course, with the halving, the market goes up. Initially, we'll probably see Ethereum take a spike up. If it's continuing in this recession sort of way, it might be a little bit longer, 2024, 2025, but that could see Ether go past Bitcoin.
Yeah, and we've talked about that
Yeah.
too, is that is a possibility. I mean, let's not get too excited about it just yet. They got to merge the thing first.
They got to merge it, yeah.
they
got to dock.
They got to dock that space station.
Yeah.
But yeah, I mean, that is fascinating, especially because the biggest problem with Ethereum right now is just the
fees are insane.
Yeah.
You should be able to send $1 to a friend or $10 to a friend.
You should be able to send $1.
You should be able to send $1 for less than $50.
I agree.
So, of course, we'll keep updating you on that. I would describe myself as an Ethereum maximalist, but I know other people aren't that way. So just to disclose that, yeah, but we'll keep you updated for sure. June 8th is when the testnet launches.
For sure, or that's
the testnet, yeah, for sure.
Okay.
Yep. And then they'll try to work out all the bugs. But that's the roundup.
All right, let's look at those charts. All right, let's take a look at Bitcoin. Right now, we're sitting at 30,700, which is good. We've gotten back above the 30K mark. So 30K has held as our support, which is a major support. So that's a good thing. The bears seem to be tired at the moment. We could be looking at a relief rally. The bear sentiment on the total market is still there. I don't think we're going to reverse the direction of the entire market, but temporarily it does look good for a relief rally / dead cat bounce, which just means that we'll move up for a little bit and then likely continue back down. If you can see here, the red line and the green line, those are measured moves. Over here, I'll show you the black line is also a measured move. Basically, a measured move is a good guesstimate of where the next move will go. So you can see here from 30,000 to 63,000. If we take that measured move and bring it back down to the previous high and low, they're almost identical. So it's not guaranteed, but it is a good way to kind of measure where the next move is going to go. So if we do that with the red and the green line, we can see that this green line here is our relief rally. So if we add that to our current relief rally, boom, we hit our large resistance at about 34. I think 32 to 38 is going to be the sweet spot. And then you can see this measured move. If that does continue, yikes, we're down to 16. Not ideal, but if you're dollar cost averaging, not something you need to worry about. If you are playing the game a little bit and you do want to capitalize on kind of the bearish market, if you are in profit, these are some things that you'll want to consider potentially taking some profit. So I think a good spot would be this 50-day moving average in orange here, Right now we're sitting at 35. So I think 35, if you can get a $35,000 Bitcoin and you've got profit, then you might want to consider taking a little bit of profit at that point. Month of May is almost over. Month of June, potentially the month of July. Looks like if this goes exactly to plan, August 10th could be our next move down. Could be earlier, could be later. It's just the economy currently, inflation, interest rates, stock market, all these things have bearish sentiment. And if we do go into a recession, that will likely send the crypto market down again. So let's take a look at the other Bitcoin chart here. Yep, you can see it right in that zone. What about 30K to 65K? What if we just keep grinding in between those for the next, year and a half? That's possible too. This market is crazy. We know that. Let's take a look at our total market cap. Right now we're sitting at 1.25. Yep. Once again, we hit the support and we are respecting the support at the moment. If Bitcoin can continue with low volatility, then the altcoins have a chance of pumping. I'm still playing a little more defense than offense at the moment, but there's money to be made on both sides. Unless, once again, you're dollar cost averaging, then don't worry about it because time is your most valuable resource. All right, let's take a look at dollar cost averaging. I've got ICX icon that has come back down to the scene of the crime. I don't think there's a lot more downside. And ICX at its peak, $13. So it's a good long play. Next, we have Kyber Network. This one just pumped about 3 weeks ago. Now we're back down to support. This one's been moving fast. It's at $2.20. Take a look at KNC. And then lastly, yep, you guessed it, Bitcoin. Just because this 30K does look like it's acting as support, and we do have that shot at coming back and potentially hitting the 50-day moving average at 35, I'd grab a little bit of Bitcoin. That's it for the charts, gang. We are the Bit Bros. Remember, we are not licensed financial advisors. All content is intended for educational purposes only. Please do your own research and only risk what you're willing to lose. We'll see you next week.
Remember to leave us a comment. We really want to know what you want to know about so we can give you the best content possible. Also, you can follow us on YouTube, like and subscribe, and you can listen to us on Apple Podcasts and Spotify. We'll see you next week.